Good morning, everyone, and welcome to our webinar, Overcoming Long-Term Care Qualification Barriers with Ames Don Erickson. Today's webinar will be recorded and later posted on our website. This does mean that all attendees will be automatically muted so that we get a quality recording. If you have any questions, go ahead and type them into the chat box, and we'll try to answer them throughout the presentation. But if we're unable to get to all the questions, we'll have a member of our marketing team reach out to you individually to make sure you get that answered. Before we get started, we'd like to invite you to join us for our next webinar on Tuesday, May 6th at 9 a.m. Pacific Time. Join Ames Derek Lape for Integrity Dashboard, What's New, What's Next, and How to Win. And with that, I'll hand it over to Dawn so that we can go ahead and get started. Take it away, Dawn.
Thank you, Jordan. Good morning, everyone. Thank you for joining us today. I appreciate you all taking the time out of your day to be here. Today, we're going to go over the GTL's critical cash product. What purpose does the GTL critical cash product serve? The critical cash product gives you LTC type benefits for home health care and facilities. The real difference between traditional long-term care and the GTL's critical cash is the way that benefits trigger. That's the biggest point we're going to go get across today. Traditional long-term care is based on the ADLs, activities of daily living. We all know that. GTL critical cash is actually triggered by catastrophic events. It's triggered by diagnosis. We're going to be going over many different things today. Protecting your family, benefits. Benefits are triggered day one. If you trigger the benefits, they're paid day one. Relaxed underwriting, and also the affordable premiums they offer. Critical cash, what is it? Critical cash insurance is actually covers expenses associated with assisted living, nursing home, and home health care type benefits. So with the plan with critical cash, there are three choices that you have. There's plans A, B, and C. If you have ever had cancer or heart attack issues or heart issues, you can still qualify for a plan with the critical cash product. The comprehensive, as you can see there, covers the full lineup. It covers cancers, cancer in situ, heart attacks, coronary artery bypass, Alzheimer's, kidney failure. It covers the whole lineup for the plan. It's the full meal deal, as you would say. But if you have had any heart issues, as you can see in Plan B, you can still get a plan with critical cash. It'll cover the cancers and Alzheimer's, kidney failure, those type of benefits. Plan C, if you've had cancer, you can still get heart or major kidney failure, Alzheimer's. The bottom section is all going to be the same. It's just the difference is if you have had any cancer or any heart, it knocks you out of that part of this plan. So you're not out by any means, but that's the way a solution is with this plan is there's multiple options. If you're completely healthy, you can get the comprehensive. But if you've had any issues with cancer or heart, you still have the benefit of getting some type of plan. So why is it important for your clients? The true thing is the need that is every day we see it, the need for a plan to be able to actually get approved. Underwriting is tough, so clients can easily qualify for this plan, but it provides a solution for their problem, which in today's world, again, it's hard to qualify, so we want to make sure we have this available. The GTL Critical Cash product provides a solution for many clients in today's world. Many clients simply cannot afford traditional long-term care. That's a huge thing, the premiums. With the GTL plan, this covers that problem. Very affordable and won't break the bank for a lot of ages. It actually covers from ages 18 to 84. As we have all seen, underwriting for long-term care can be challenging, and so We all have seen this at some form working in the insurance world. With the GTL Critical Cash, we have a good chance to actually get them a policy and have it approved, and very quickly. We're always looking for ways to help to get a policy placed, and with this, I really think we can do that. So critical cash, it's a hybrid critical illness long-term care that actually pays day one for conditions usually resulting with long-term care claims. Yes, this product pays day one. Critical cash, if you are diagnosed, that triggers the home health care benefit. So with their product, there's the home care benefit, which they call their base benefit. And then they have the additional benefit for assisted or nursing home. The product, with this product, the maximum benefit, so we have a maximum benefit with this product of $6,000 combined from home care and the facilities. They also have 4 benefit periods. They have a 6-month, a 12-month, an 18, and a 24-month period that you can choose from. We will go over some illustrations a little later in the webinar, but I want to make sure that we all have the idea of the benefits that you can get of $6,000 a month with the 4 different benefit periods and the age from 18 to 84. So the critical cash, when you trigger the benefits with this benefit, it can be used for anything. It's not reimbursement for the home health care, which is called the base benefit. You get diagnosed with either cancer, heart attack, stroke, Alzheimer's. If you get diagnosed, when you do, you trigger the benefits for the home health care benefits, which is called their base benefit. And it kind of is confusing when they talk about a base benefit and the facilities. The base benefit is the home health care benefit that you receive. So when it's triggered, you get that benefit. It covers all the costs you can see on the screen, from co-pays for doctors, mortgages, everything you see here, household bills, and much more. It's not a reimbursement. It's a check that you get when you're diagnosed. So I just want to make that perfectly clear to everyone so we know that, there's so many things that cost money, and so to get a lump sum, instead of having that monthly benefit of, let's say, $1,000 or $2,000 a month, you can actually do a lot more. And I'll talk more about it when I'm going over the illustrations. That's coming up in the next slide. We have a few illustrations that I'll go over. So in this example, how I based it was $1,000 for the base benefit, which is the home health care. Okay, the facility is $5,000 a month. If it's assisted living, it's half of that, so it'd be $2,500. And so I put a 24-month period. Premium for a 55-year-old, premium is $95 and some change. For 65, it's $177.81 monthly. The maximum policy benefit, $432,000. How that triggers, though, is so if it will have to fully restore 3 times to get that. So you see how it says 6,000 times 24, that's the benefit period. But then you times it times 3 for being able to restore it up to 3 times. So with this product, they have a built-in restoration of benefit. That benefit period will fully restore 12 months following the end of a prior benefit period. So they have to be completely clear of any benefits they have received from this product. And this is available in most states. But to do that, so you get 12 months times 3. So the 6,000 times 24 times 3, that's where you get your $432,000 if you actually were able to restore it 3 times. So let's talk about the lump sum. So this illustration here has a base benefit, which is $1,000, and the benefit period is 24 months. So if you trigger the benefit by diagnosis, that $1,000 times 24 would be $24,000. That's where you would get that lump sum check for $24,000. Then if you needed more benefits, if you need to go into assisted living or to nursing home, you would get the other benefits that are included in this policy, which would be the $2,500 or the $5,000 a month. Those are monthly benefits when you go into facilities. So there's different ways to look at this for illustrations and the lump sums. So let's say you do a $6,000 with $2,000 a month with a $4,000 a month on the facility. So $2,000 on the base home care, $4,000 on the facilities for 12 months. You're still going to get a $24,000 check if you were diagnosed. But let's say you do a $6,000 benefit pool of money with $1,000 on the base, $5,000 on the facilities. You're going to get, for 12 months, you're going to get a check for $12,000. So there's, like I said, there's many options available. In the monthly benefit for $6,000 a month, that's the full maximum benefit you can get a month. But for the benefit periods, 6 month, 12 month, 18 or 24, those are the benefit periods you can choose from. So it really depends on the benefit period you choose and the lump sum on how much you put on the home health care. So again, the lump sum is a huge benefit, and I have a few things to talk about later on, but the restoration benefit can greatly add to how much you're actually going to receive with this product and for how much it's worth. So we're going to do another proposal designed a little differently. So you can see here, though, again, age 55, a 55-year-old or even a 65-year-old for $6,000 a month benefit for 24 months. If you look at that with traditional long-term care, that would be at least 2 or 3 times that price that you would pay. So here's another view of it. So let's say you do a base benefit home care of $2,500, facility benefit of $3,500, still a combined total of $6,000 a month, but for 12 months instead of 24. A 55-year-old is only 113 and some change. A 65-year-old is 194. But with that lump sum there, you're actually going to get a lump sum check for $30,000 if you're diagnosed and trigger the benefits with a cancer or a heart attack, stroke, that kind of thing. So there's many ways to actually look and to build this plan, depending on if you want a short benefit or a long benefit from 6 months or 24 months. But the $6,000 a month, that's the design we build with. And on this plan, there's no inflation. So this product has actually, I've never had a rate increase. We've had it for over 10 years with no rate increases. And the reason that is that there's no inflation. So it helps protect from having any increases. But this design of a 12-month, it gives them, a lot bigger benefit. And with premiums, the biggest thing is the more you put on the base benefit, the home care, the higher the premiums are going to be. You can put a maximum of $5,500 on the assisted living or the nursing and only put $500 on the base benefit. That'll give you the least amount of premiums, building it like a facilities policy. But I always try to design it at least with $1,000 on the base benefit to give them a good lump sum that they'll get if a diagnosis happens. Times have changed. The odds of surviving life-altering critical conditions are better than ever, as you can read here. Early detection, prevention, medical advances. But as you can see on the bottom, every 21 seconds, every 25 seconds, every 40 seconds, people are diagnosed with something. So this plan covers as a diagnosis, not as the traditional daily activities, 2 of 6. So they're gonna, if they trigger benefit, they're gonna get the product. With knowing that, the GTL's critical cash product is a very good solution to help clients qualify for a policy that they may not have qualified for a traditional plan just for the underwriting itself. It's not easy to qualify, but this is a great way to start also. You can always put this plan in place if you're looking for a traditional plan. In the pre-qual, we do one with a traditional plan and they come back and say, no, they're not, they wouldn't qualify, but they have a chance they could. I would recommend they start with this. Get this policy in place first. Once it's approved, it's much easier to get a traditional, go and apply for the traditional and see if they would qualify. And then you have this one in place. So if they didn't qualify for the long-term care, you actually still have something enforced instead of going the other way and going for a traditional plan, getting declined, and then trying to get this product. Whenever you get a decline, it doesn't help a client to get another policy. And by doing that, you actually get something in place for them. which is what our job is to do, is to help them get something in place. So underwriting, critical cash, as you can read through this on the screen, I'll let you read as I talk about it, but pre-qual, this is their questions pretty much in a nutshell that the critical cash product has. Really, in the past 10 years, has any person to be insured had been diagnosed as having or received medical treatment by a medical practitioner for Lou Gehrig's, Alzheimer's, central nervous. The list is the major things that insurance companies look for: paralysis, Parkinson's, and so you can go right down the list. 10 years, person being diagnosed, receiving treatment for AIDS, human immunity, HIV. The past 5 years, has been treated for drug or alcohol abuse. So they're major things that they're looking for. But as saying that, they don't go through every detail as a traditional long-term care would. And so that's where you would get a much easier, or I would say relaxed underwriting to help qualify for a plan. And I'm just going to ask Jordan if there's any questions along the way as we are going through this. Hold on, and we'll just kind of see if there is.
I don't see any in there yet, but I'll let you know.
Okay, thank you, Jordan. So the critical cash, why your clients need the critical cash? Well, diagnosis, cash, no ADLs triggered by the benefits. That's triggered. That's what you're going to do. Diagnosis triggers the benefits. First day cash. I don't know how you can go wrong when, say, a serious thing comes up when families need it at the most. It's one of the toughest things to know what you're going to do. I mean, the family kind of goes into shock, saying, what are we going to do? And with this plan, that day one cash, it's a huge stress relief, I would believe, personally. Use the cash for anything. It pays the benefits to the policyholder. That's the biggest thing. And it doesn't go to a facility. It doesn't go to someone else. It actually goes to the client. So you get it and you have the access to use it for however you'd like. The cash benefits paid regardless of the actual expenses also. So whatever that money is for, you get that benefit. You don't get a portion of it up front. If it's $24,000, if it's $30,000, that's what you'll get up front, paid to whatever you want to. Like I said, the multiple paid potential, the restoration up to 3 times. I mean, that's huge. Again, I want to make sure that we all know benefit period will fully restore 12 months following the end of a benefit period. Not all policies will do that, but it does apply, or it does not apply to the one thing of Alzheimer's disease or paralysis. That's a one-time lifetime maximum benefit. I want to make sure we make that perfectly clear for everybody today. And then guaranteed renewable. As long as you're paying the premiums, the policy will be in force. So I want to make sure everybody is fully aware of those. So this is a personal experience that I had here in the office, a very good, very close friend of mine. So I'm going to tell you about this. And this product really would have benefited their family. And it's close to home because he was a very good friend. We worked together for 10 years. He was actually diagnosed with pancreatic cancer in his mid-50s. This came out of left field, and it was very devastating for their family. They ended up going through a retirement plan that it was not a lot, and the doctor bills, travel costs, back and forth to Seattle. And so he was actually put on a trial treatment that was that he was actually qualified for. But just knowing he would go to Seattle every Monday, and I mean, I tell you, it was for years. He went to do this to prolong this thing as long as he could. He had a long, good fight, but I tell you, it was very hard on the family. And if they would have had something, we all know hindsight is 20/20. But if they would have taken out even a small policy of this, I mean, you could do smaller amounts. You could do 500, 5,500 on the nursing facility, which the premiums would have been under $100 a month for him easily. I mean, it could have been $50, $60 a month. But just having those benefits would have been a game changer for him and his family. And so knowing that it would have softened the blow for them, and they would have had a little easier time with it. But I tell you what, we battled with him all the way through this thing. But knowing that a plan like this would have done so much for him and his family is just, knowing that is very hard to say, why didn't we do that? But hindsight, yeah, we should have, we could have, shoulda, coulda, woulda, that kind of thing. On top of that, his son, and he didn't want my good friend to know, but his son actually was diagnosed with a rare form of cancer also, not shortly after that. And he passed not long after Mike did. So, and leaving his wife and 2 little daughters. Like I said, I get choked up a little bit about this, but if they would have had a plan also, it would have cost them a lot less. He actually passed away in his mid-30s. So that was, I mean, you just never know when it's going to happen. But I tell you what, both families would have had a very big benefit to help them along the way, just to keep them going. But and the stress would have taken off. But since then, it's been kind of a tool of mine that I try to tell and make everyone know the best of my ability to be aware of small costs monthly that could do so much for a family's future. Like I said, this is a catastrophic plan. It only goes up to 24 months. Long-term care traditional, it definitely is, for the long term. You can do 3 years, 4 years, 5 years. But for a family that is limited budget, but they're looking for some kind of coverage, this product, you trigger the benefits, you get paid for it, and for what it costs, it can be a very big help to families. Even my daughter, I'll say this too. My daughter, she's hounding me to get some life insurance. She's pregnant. She's due in July. She goes, Dad, I need to have some kind of life insurance. So if something happens to me or my husband, the kids are taken care of. So we've looked at this plan for her. She's very interested. We're going to actually work on that and see if it's something that they want to do or go somewhere different with a life insurance policy. And she's only 28, so she knows the benefit of these kind of plans. I've kind of ingrained it into her head that I've been working here so long, to give the opportunity to help your family. It's to relieve the stress to actually get a policy. So you don't have to be 65, 75, 55. You can be from 18 to 64 with this plan and still get benefits and not have a huge premium to pay every month. So it makes it, you have a peace of mind. That's really a big thing that I want to make sure I got across today, is that this plan is to help. It's in almost every state. California, it is not in. It has some limitations in some states, but I tell you what, if you are looking for a long-term care plan, this plan has the same kind of benefits. It works for home, but the home can actually be cash, so you can use it for whatever you want. And then it has the assisted living and nursing facility benefits. So please make sure you talk to us about this plan, not just long-term care traditional or Medicare supplements or any other plans. This plan can go on top of any of those. Okay. Kind of a by the way, I just want to make sure that if you have seen our website, you don't know about it, there are many tools. It's kind of off topic, but I want to make sure everybody is aware. It's yaim.com. There's tools, there's webinars. We have recorded all the ones we've done in the past. You can watch them at your own time, but definitely go out there, check it out. We're here to help you in all the ways we can. One other piece I wanted to talk about was our newsletter. Have you seen it? This is something that our marketing coordinators put together. Our team here of marketers kind of give her ideas to go off of, but there's a lot of great detail, lots of material in it that you can learn about. If you haven't seen it, we can email it out to you. I can send you the next one we have, or when we call you out after today's webinar, ask us, hey, send me the newsletter. I haven't seen it. want to know what's going on, we have the upcoming webinars on there. There's lots of good information and might help you in some other way that you don't know a product might. As you can read here, at AIM, we're dedicated to be more than just your upline. We're your true partner in business. We want to make sure that you have the best commissions, success, diverse solutions. We want to make sure you have all the tools, and we want to make sure we can do that for you. So, kind of little tidbits of what we can do to help you. Okay. The only other things I really will have today is contracting and certifications. So, with this product, you actually don't have to have your LTCCs with a critical cash product. Long-term care you do, errors and omissions you'll need to have, anti-money laundering. If you're going to do life products, term life, you'll need to have your anti-money laundering. But a good thing to know with the critical cash is you don't have to have your CE training, which is 8 hours original or 4 hours the refresher. So just a few tidbits. But with saying that, I want to say thank you for joining me today here at AIM with this webinar. I feel this product is a very big need and can help with a lot of different solutions. So we'll be reaching out to you today or tomorrow. If you have any questions, you can always give us a call at 800-672-7202. Again, I appreciate your time today, and everyone have a great day.